So the reality is it's a very big freaking deal, and the first time in my lifetime. I would expect, right now my net worth is down just like the market, probably 50%. If I went to sell things, I could probably still get some money from them, but definitely not as much as I would have, a year ago.
All right, what's up, everybody? I'm here with David Osborn. He runs a residential real estate team that does over $12 billion a year. He has a very large holding for his own portfolio, and he's the New York Times best-selling author of Wealth Can't Wait. David, how's it going?
Hey, Cecil, great to be with you, man, in these crazy times.
Yeah, absolutely. Speaking of which, coronavirus right now, as of April 1st, 9 a.m., we have over 877,000 cases worldwide, with over 188,000 in the United States. Compared to 2 weeks ago, we had 169,000 worldwide. So it's been a massive growth rate there. Although in the last couple of days, luckily, it looks like it's declining. And it's had a massive impact on our economy. In fact, if you think the stock market is a good implication of the economy, the Dow Jones, even after a slight recovery, has dropped over 25%. David, is somebody who runs a massive real estate team and has massive holdings. How has this impacted you?
Yeah, well, first off, I'm a pretty prepared guy and a pretty thoughtful guy, and I've lived through a bunch of crashes, and I have never thought of preparing for a pandemic. So I've seen the movies, I've seen the TV shows, but I never really thought I would see one in my lifetime. And I guess that's just a failure on my part to not be even more prepared. But the impact on my business has been massive. I would guess, and having lived a long time, I have a lot of anecdotes of what seems to be true. And one of them is that the stock market is usually 6 months ahead of reality. So, obviously right now we're fine. We had a good February. There was nothing wrong with February. We get our February numbers in March. March is okay. But the stock market 6 months ahead. So they're predicting 6 months in the future. And we could very likely see zero revenue in my businesses 6 months in the future. And that's a lot of overhead with no revenue. I mean, we're talking, millions of dollars we spend every month. And we might have to, which is pretty dramatic. I mean, a downturn, you get down to maybe 30, 40% of where you were. And if you're lucky, you could kind of cram costs down as well and get to break even, or a loss that you can handle with reserves. In this case, zero is insurmountable. Now, is that a bit dramatic? Maybe. I don't know. I've never been through a pandemic like this before. And as you said, those numbers are probably wrong, by the way. It's probably way higher because they don't track all the people that didn't go in and get tested. China is very questionable. Iran is very questionable. Dictatorships remain in power by looking all powerful. What's that word? Omniscient or
omnipresent or something.
Omnipotent or something.
Yeah.
So they don't tell the truth. They're like, yeah, we fixed it. It's gone. Oh, you have it? Well, we'll just take you out back and shoot you so no one knows about you. That's literally, that's being a bit facetious, but for sure, everyone that tried to report on it in China went missing that wasn't an established mainstream speaker. So we're probably well over like 3 or 4 million worldwide. The deaths are probably way higher. Our numbers are also low because they haven't had good testing here, but I think the deaths would be accurate because we don't hide stuff as much as those dictatorships do. So the reality is it's a very big freaking deal, and the first time in my lifetime. I would expect, right now my net worth is down just like the market, probably 50%. If I went to sell things, I could probably still get some money from them, but definitely not as much as I would have, a year ago. But I'm not a seller. I'm a buyer and a grinder, and so we're just going to grind through this. And we're busy trying to protect employees while cutting overhead. We are reaching out and applying for the government support options so we can keep everybody employed. And we're just lining up all the things you do in a crisis. Fortunately, we do have some reserves. We've kind of been conservative in the past ever since 2008, which we were able to survive. And it's also my third crisis, so I was more scared in 2008. This one's different, but I was more scared then because it felt more existential. Right now, I've kind of built some reserves. Unless this goes on for years, I think we'll come out of it, and then we'll just see what the economy does after that. But I definitely don't think things are going to be as good or as easy as they were.
Yeah, sure. So there's a couple of other questions. You mentioned a couple of short-term asset management strategies that you're doing. You wear two hats. You wear one in terms of running a real estate team, and then you wear one as a landlord. Today's April 1st. What are you anticipating in terms of rents?
Yeah, that's a big deal. I got a private equity fund with over 400 homes in it, and I've got my own portfolio of about 100 single-family homes. So we're holding our breath, waiting to see what happens. You've got some mayors and leaders going, "Don't pay your rent; they can't evict you," which is, just shows you how far our world has come. When, JFK was a Democratic president who said, "Ask not what your country can do for you, but ask what you can do for your country." Kind of like that. Be responsible, be resolute, try to do your responsibilities now. And then now we've got, I think the governor of California might have been a mayor, but I thought it was the governor, said, "They can't evict you, don't pay your rent." So it's different. And I get it. If people are fired and have no revenue, there's gotta be a pinch somewhere. But, we're working with people that call us and ask us, every single person that calls us and asks, we work with them. I'm like, "Okay, can you afford half? Can you afford, do we need to put, so we're working with people, but so far we're good because we got all the rent March money in, so it's just a matter of what's going to happen in April. We happen to be also pretty much diverse through some states that don't have really big outbreaks yet. So, hopefully those people are still working and still want to pay their rent. So we're expecting, I think a great leader prepares for the worst while looking for the best, and we're prepared for the worst that could happen. And I've got pretty low leverage on my real estate portfolio, thankfully, at probably 50% across the board, which is less than I could have and less than a lot of people have. We've called every single bank and started conversations around deferment. We spent 15 minutes on the phone with Chase, and they deferred my primary residence. Again, I don't really need to defer right now, but if they're offering it and it can help me accumulate some extra cash becomes oxygen in a downturn. You have no options when you have no cash, and when you have cash, you have options. So just creating as many options as I can by accumulating as much cash as I can, being super proactive, calling landlords where I'm a tenant and asking for a rent break. We've had really good responses. And by the way, where I'm a landlord, like I said earlier, people call me and ask me for a break, and I've been very responsive there as well. We cut rent. We try to cut rent to what we can afford based on our mortgages. So in one case, we cut rent 50%, and in another, we cut it by a third. And I'm sure there'll be more conversations. I think the key is to be proactive and call and have conversations. Some landlords have been jerks to us, but most of them have been very receptive and very understanding.
Sure. An interesting, article I was reading, talked about, a lot of people focus on, consumers, which I think is extremely important right now in this crisis. Most people, 78% of American citizens live paycheck to paycheck, 30% don't have savings. So there's a big focus on, demand side stimulus. People need cash in their pockets because they're getting laid off at record rates and they don't have the ability to pay. But a lot of people also don't recognize that a lot of landlords also live pretty close to paycheck, and a lot of these lenders live paycheck to paycheck. And if it really does start on the bottom. We're a bottom up economy, in the sense that we're built on the masses. And if the consumers can't pay their rents, then the landlords can't pay their lenders, and then the lenders have a liquidity crisis. You have the ability to really look from a meta perspective for your real estate team, just because of the sheer volume that you're overseeing. I read an article actually from a KW guy, and you can tell me what you think about this. He mentioned how lending has shifted, residentially speaking. He said what's happening is lenders will lock in a rate, and then and then what they'll do to hedge that rate, if in case it goes up or down, is they'll short mortgage-backed securities. So normally if they lock in a rate and then it goes one way or the other, the short of the mortgage-backed security will offset that, will hedge that. But what's happening with the Federal Reserve when they're buying these treasury bills and they're pumping money in, they're buying or insuring these mortgage-backed securities, it's artificially increasing or rising the rates of these mortgage-backed securities. So then if you get locked into a rate on a residential loan, but then the rate goes goes one way or the other, and the mortgage-backed security that you have shorted to hedge that doesn't do what it's supposed to do, you have another crisis within the lending markets. What are you seeing from a meta perspective? I know that we probably still have the tail end of a lot of business over the last couple of months, and you mentioned that the coming months are going to be probably more problematic than it has been in March. But what are you seeing from a lending perspective right now? You're muted, David, by the way.
Every crisis, lenders tighten up. I mean, it's always the thing. They're too loose when they shouldn't be, when the economy's booming, and they get really tight when things get bad, when they should be lending. That's the cycle that I've been through like 50 times in my, well, no, not 50 times, 3 times in my life. They always do the same thing, and it's natural. They're fearful, and they get nervous, and, things tighten up, and that's exactly what we're seeing right now. We're just seeing, the government, the banks get tight, and start making, and they have a hard time getting their money. They resell most of these assets. So yeah, for sure, it's happened every single time. And I remember in 2010 when prices were down 40%, and it was the perfect time to lend on an asset. And
oh, you accidentally muted yourself there.
Money. Oh, so sorry. So then the secret was to just calling as many cases as possible and keep hustling. Like everybody, like we've all got to hustle, and that's what we're all doing all the time. And lenders will really tighten up on you. That's what they do. They tighten up when they shouldn't. And it's not really their fault either. But I do think they're being way more flexible than this time than I've ever seen before, certainly on a personal basis. When I called and, got my mortgage deferred, it was a 15-minute automated phone call with Chase. They were just like, yeah, you got some problems. Okay, sure. We'll defer you. We'll call you in 60 days to let you know how you can make up the deferment, what your options are. And then we called on another property. So I have 4 properties that are pretty large. One's a rental and one's a lake house. And, so 2 of them responded like within 15 minutes, and the other 2 we're still working on. And I guess it depends on the scale. And I think also people, I think people are getting back. I think the banks are getting backed in terms of with regular humans by the government in a very way. So that's why that works. But yeah, it's a scary time. It's not as scary to me because I've been 3 of them. So I'm not as panicked as I've been in the past. I'm not as nervous as I've been in the past. And what I'm finding is, I just know the process. Every day you're in a good market, you're one day closer to a bad market. And every day you're in a bad market, you're one day closer to a good market. Well, now we're in a bad market. So every day we're in it, we're one day closer to a good market. So it really is just about survivability. And if you can survive, everyone can. No one just dies of starvation in the United States of America. So as long as you don't get, COVID or anything like that, and you survive, you're going to end up out of this, and there's going to be a lot of opportunities. To take advantage of opportunities, you either need cash or you need to know somebody with cash. So that really comes down to, your outcome is going to be based on survivability, which we're all going to survive. Just don't be depressed. Don't stress. Don't freak out. Hang in there. Do what's obvious. Be proactive. Don't quit. Take extreme action. Call your landlords. Call your banks. Be engaged. And just know that in 9 to 18 months, there's going to be deals all over the place.
Sure. I've been fortunate enough to join in on a call or two, with GoBundance, specifically, Peter Schiff. There's people out there that are saying that what's happening right now could put us in a position where we could potentially lose our position as the reserve currency. Previously we were reserve currency because of gold reserves, then because of oil prices. A lot of people are asking, why are we the reserve currency now? You mentioned, we're going to bounce back, which I'm sure we will, and hopefully it doesn't get to the worst. But what do you say to the people who think that this is going to get a lot worse than we've ever seen, and it could get as bad as 1929?
It's possible, man. Anything's possible, right? So you just got to prepare for the worst and look for the best, like I said. But there were people that survived and did well in 1929, and there'll be people that survive and do well in this. I don't think it gets that bad unless everyone loses faith in the dollar as the reserve currency. I don't see that happening right now. Peter Schiff has kind of said the same message for 20 years. The world's going to blow up and you should buy gold. And one day he'll be right, you know, and for sure there's a lot of problems I have mentally with the amount of money that we're spending. You know, but at the end of the day, the way we spend the money and the amount we're spending bothers me. But I'm not a big enough brain to figure all that stuff out. I've just got to count on what goes up must come down and what goes down must go back up. So we're, you know, from an economic point of view, there's never been a time in history when real estate was worth less, you know, 20 years on than it is from today. So as long as you can hold, you're okay. So I don't think we fall into that level of Great Depression. And if we do, we'll still be fine, man. We're still, you know, there's still the United States of America. People are probably not going to starve. You know, there's a lot of good to see in the world. You've just got to get through these moments. In some ways, weirdly enough, Cecil, I'm more engaged. Like I've been, you know, I can't say you just got to know you have to get into the game. It's way more interesting now than when you're just sitting collecting checks from tenants. So I've gone from a rent collector, you know, like a guy, and landlords, by the way, don't get any good reputation, even though we provide housing for a lot of people. And a business owner to now fully engaged in trying to figure out how to survive through this extreme downturn. And it's more engaging, and in a way it's more interesting. And I don't wish it for myself or anybody, but you know, it's just where you build character. And it's where I saw my parents in the crash of the 80s, the late 80s, have 4 rental properties, and their partners on them, they had 50% partners on it, and they bailed. They like, we can't make these payments. So my dad, a retired soldier, and my mom, just getting into real estate at the time, didn't make much money, but they survived. They kind of kept those 4 rentals, bought out their partner for nothing, and took on the responsibility, and they hung in there. And it took a long time to recover from that. They bought those properties for like 60 grand a piece. And finally, like 20 years later, they sold them for 150 grand a piece. But they just had survivability. And it was, you know, if you have survivability and you just keep plugging through and figuring stuff out, in the long run, you'll do well. I mean, even the Great Depression in 29, you know, 33, I don't know when it ended exactly, but I think it was like the 40s. So 10, 15 years. I think that's unlikely that we happen to have that happen again. One day the whole world may go pop, but I don't think this is it. And I also think there's a lot of good that comes out of this in terms of like spending more time with your family and spending more time making connections. I know way more of my neighbors now than I've ever known before. I really appreciate when I get to talk to my mom or talk to, you know, my friends. We go for walks together in our neighborhood where we stand across the, you know, each side of the street. It's all pretty enriching in some ways. So there's always, you know, we tend to freak out and overemphasize the importance of economic, and economic is extremely important. Don't get me wrong, as a man who's spent his life trying to be financially free and try to not have to be stuck in the rat race. But at the same time, it's not the most important. There's multiple things more important than that. Your spiritual basis, your health, your focus, your relationships with your family and friends. And this is a great time to understand all of this. And while it's not a good time, in my opinion, to be aggressive and do deals, it's a great time to be aggressive in the area of learning and building your knowledge base and your skills and your strengths. It's a great time to listen to books again, listen to Jim Rohn, listen to Robert Kiyosaki, go read the Cash Flow Quadrant again, listen to Wealth Can't Wait, or read the book. This is a great time to be aggressive about enhancing your own personal skills, if that makes any sense.
Yeah, absolutely. Well, as a final question here, I know that you have a meeting you got to run to. You mentioned that you think there might be deals coming in 9 to 18 months. What happens in the 9 months leading up to that point?
Prices go down slowly. I mean, hope dies slowly, so it takes people a while to get adjusted to the new reality. We're probably going to 30%, 20 to 30% unemployment. That's like 30 to 40 million people. And yeah, the government's doing a great job of stepping up and paying everybody. But that's going to cause a lot of pain. When that happens is, you know, people aren't paying their rent, people aren't buying houses. So what has to happen when there's no demand, prices come down. So you've got to just let that pricing slowly deflate. And that's really where we're at right now. We're just waiting for prices to deflate. And then when they get, you know, that's the 6 to 9 months. I'm not even going to start looking for things to buy for about 6 months. And then around 6 to 9 months, I'll see where we're at and whether we're over the hump. There's a possibility that in this circumstance, it's a little quicker. What we're waiting to see is this the V recovery, which is down, then right back up? Is it a U, which is a shallow U where it's down for a while, then goes up? Or is it a long U with a slow, rise, almost like the Nike check mark? And I personally think it's going to be a shallow U, but based on whatever it's going to be, I would guess you've got to be prepared. And it could be that in 90 days we're ready to roll, and it could be that in 6 months we're ready to roll, but it's most likely for me 6 to 9 months before I start looking. By the way, I'm fully hopeful for a V. Like a quick recovery would be awesome. It would make it easier for all of us. But I also have to prepare for the Nike, the down, and then the long, slow climb. There's definitely going to be a climb. There always is, but it's just a matter of how long it takes for us to get back to where we were. And, with the amount of money the government's putting into it, it should shorten the pain. But the only question is, do people remain faithful in the dollar with all the printing we're doing? And I think they will for now. I just don't think there's any good alternatives. You're not going to go into the yuan. You're not going to go into the pound. So either the whole world is going to have a crisis of confidence, or, we should bounce back relatively quickly. Now, I think behavior shifts for the long term, and I'm curious to see what happens there. Do people, work from home a lot more? Does that make office less valuable? Retail guys are getting killed. They were already in pain, and now they're just getting killed. People aren't paying rent. They're shuttering up their stores. They can't pay rent. They've got no revenue. So that may accelerate that trend. Will people move to the suburbs? Will they move into condos? We just don't know. It's just a very interesting time to be alive. But if you let it and you keep your awareness high and you soak in the lessons, there are just so many lessons you'll pick up. Like, for instance, when I was going through that in the 80s with my mom and dad, I was only 16 years old and I had a lawn mowing company, but I was super aware. I remember the guy that couldn't hang in there with my parents, the partner, his back went out and his wife would drive him around and he'd be laying in the back seat of his van. He couldn't even sit up properly. And I was like, wow, sometimes when stuff gets really bad economically, you have psychosomatic physical problems. Now, I'm not saying he didn't have a legitimate physical problem, but it was a way of not looking at what was going on around him. And maybe, he hadn't really kept himself in shape either. And maybe that's also a lesson, so, and I remember thinking, and the other lesson I picked up is and this is the best lesson of all time for building wealth and being successful, persistence and tenacity wins. My folks weren't that sophisticated. My mom never went to college. My dad was in the Army his entire life, didn't get his college degree till he was in his 30s so he could ascend the officer chain in the military. And they were just persistent and tenacious and just fighters. They didn't quit, from a kind of a gritty level more than a super intellectual level. And they made money off those properties. It took a long time, but and by the way, if we'd kept them another 10 years, we'd have made double that again, because that was the most of them were in Austin, Texas, which went crazy hot eventually. We didn't sell them into the heat. We sold them in just a reasonable climb. But and I learned so many lessons from that. And so even if you're young, and you're really lucky actually if you're young and you don't have a lot of vested interest, because you're not really paying the price, but you can still get the lessons. Me, I'm paying a price. Like, my net worth may be down 50%. My revenue could go down to zero. But the benefit I have is I've been through a bunch of these, so I already know kind of the process, and I've also prepared for them, because I've reserved things. I remember when I was young, meeting older guys that were conservative and going, man, you're crazy, dude. You should go all in all the time and just max out all the time. And I did that for a number of years. Then I went through a few crashes. I was like, hey, maybe I should be a little more conservative and hold on to a little cash. And now I'm that slightly older guy. I'm still aggressive, but I'm way more conservative. And that's paid off this time. From 08 to 2020. I built up reserves in my businesses to a highest level we've ever had. So again, is that perfect? No. If we got zero revenue for 6 months, that'll eat up all those reserves, but maybe even 4 months. But it means that I can survive a pretty deep dip for 90 days or something like that. So, it's all an opportunity to learn and get brighter and stronger and more capable. And that's what your listeners should be doing. Is everything in life is about awareness and personal development. Your external life is a direct reflection of your internal perspective, thoughts, and ways of being. And the more energy you put into that, in the long run, it'll pay off bigger than almost anything else in life, is your personal development. And this is a great time to personally develop. You got nothing to do. You're stuck at home. listen to, there's just so much wisdom out there. Just go grab it and ingrain it in yourself.
Absolutely. And you mentioned the focus on family. That was a big shift for you recently, and it's even more of a focus now. And I think that's what's really important too, right?
Yeah, great point, Cecil. I mean, I was a super ambitious guy, and a lot of my life I sacrificed, vacations and fun and relationships for just making money. And then my dad died of cancer slowly, and that was one thing that pushed me towards family. And then I had, I lost a child in a stillbirth, and then I had another child, and so now family's become way more important to me, and it's something I put very high on my agenda. And I'm lucky enough to really enjoy and appreciate that. And now they're at home with me. So my daughter's becoming a phenomenal ping pong player. She's 10. We've been playing all the time. She's got no forehand, but her backhand is wicked. And then my son and I are wrestling and playing. He was sick for a while and had an earache, which was a whole new level of fear, because I kept telling my wife, we've had earaches before. This looks a lot like a cold with an earache, just like Bella had when she was a kid. It's probably not COVID, but we couldn't get the test. So there's that slight percentage fear, like maybe this is that, coronavirus, but he's over it now. He's back to normal, which is great. And we hung in there, and we're chill. And it's all very interesting. So being at home is great, and spending a lot of time with him is great. And I'm really glad that my focus is where it's at now, because if I was me 10 years ago, I'd have been antsy to just get back in the fray. And I'm not that same man anymore. So yeah, family, and still personal development. I'm still constantly working on sharpening the saw. Now it's more about being more compassionate and softer and more engaged with my family and stuff like that. So yeah, life's a never ending journey of learning and personal growth. And this is just another learning opportunity.
Absolutely. Hey, well, David, thank you so much for your time today, man. I appreciate it. Stay safe and healthy.
Thanks, Cecil. Take it easy, bud.
Have a good one.